It's an excellent balancing job with that glass, by the way.
Yeah, I know. If it falls, it'll be, it's a challenge.
Yes.
Let's just say that.
Welcome to the Old Fashioned Real Estate Show, where hosts Brian Leverage and Jeffrey Holst pour out old fashioned real estate advice.
Episode 42.
Welcome back to another episode of the Old Fashioned Real Estate Show. I'm Brian Leverage.
And I'm Jeffrey Holst.
And we're glad to be here with you all again.
Yeah, I mean,
bottom of our hearts.
Well, yeah, I mean,
mostly.
Yeah, more like the middle part of my heart, really. So I'm really liking this environment, by the way, you know, with the little, we should have probably turned the fire on. That would have been pretty fun.
There's a switch somewhere.
Yeah. I'm sure there is. So we could have turned the fire on for the next episode, maybe, if we ever film in this location.
We'll do them for the winter releases.
The winter, well, the way this is going, we might not be able to film again until winter. It's been 6 months since we filmed together before. But anyway, so listen, we have a very interesting topic today. Brian, do you remember what it is?
I think it has something to do with real estate, doesn't it, Jeff?
Yeah, I think that's right. So we're wondering if we should invest in real estate. Do you think we should invest in real estate?
Well, that horse is already out of the barn.
Yeah, that's right.
Yeah.
The topic actually is, should you, the viewer, invest in real estate? And the answer to that is...
yes.
But...
it depends.
That's right.
The catch-all answer on all real estate
So yes,
questions.
but maybe not. Maybe yes. We're not really sure. That's the end of the show?
Yeah.
Thank you for coming. No, all kidding aside, real estate's been great for me. I mean, but I'm a person that loves real estate. I love being involved in real estate. I love looking at deals. It's something I think about a lot. So it's really great for me. And if you're watching this show, there's a good chance that you also like real estate, that you're interested in real estate investing. You probably already have some real estate investments. And if you're in that situation, the answer is almost certainly yes, you should be investing in real estate.
Yeah, and I think, you know, given that we're, you know, filming this still in the midst of the pandemic and all of that, I know that for a lot of people, sometimes, you know, major changes to the economy or life events are what spur, you know, that sort of call to action. I know that was true with me in the last, you know, recession, and
it was definitely true with me, right?
Yeah.
I mean, listen, I got diagnosed with leukemia, ended up personally bankrupt, and I thought I need to figure out something that will pay even if I die, right? Like I need something that's going to continue to give money to my wife if I die. And it turns out if you have a job and you die, they stop paying you. Mm-hmm. But it's not necessarily true with real estate. It's not necessarily true that they keep paying you with real estate either, because it needs to be properly managed, an entirely different issue. But the point is, it's something that can produce residual and continuous cash flow, even for your estate, even for your family after you're gone. And also you can, for the most part, you're able to, you know, continue to get cash flow even if you're not working day to day. It's not completely passive. I think we had an entire episode about that called the passivity scale episode. Do you remember what episode number that was?
not at all. But, I mean, in that episode, we did discuss...
It was show 6, actually.
Okay, good.
It's this one right here.
Yeah,
show
somewhere
6.
up there, yeah.
Yeah.
So, you know, just a quick refresher on the whole passivity, right? You've got the far end of the passivity scale, which is like you basically just give your money to...
well, like a real estate investment trust, or maybe you invest some kind of somebody else's deal, where you're going to do some due diligence on the front end to decide if you like the sponsor, you like the deal, whatever it is, and then you kind of forget about it.
But once your money's in, it's in.
Yeah, you have no control.
You don't have any control over what happens. To then going to the opposite end of the spectrum, where you're essentially doing everything. Right? Like
right. You're going out in the forest and cutting down trees and building a log cabin and renting it out to your neighbor. That would be very unpassive real estate investing.
Or an episode of like Grizzly Adams. So
yeah, well, except for he wouldn't rent it out to his neighbor. He would just live there himself. But yeah, I mean, listen, there's clearly a range of how passive you can be. I mean, if you get into like turnkey investing, someone else is doing majority of the work. If you're buying property and hiring property managers, you're somewhere in the middle, and then you have the far end extremes. But if the point is, if you're not interested in like actually mitigating the risk of real estate investing by putting some effort in,
It's an excellent balancing job with that class, by the way.
I know.
If
If it falls, it'll be it's a challenge.
Yes.
Let's just say that. But if it falls, it'll be on your floor and not mine. So
True.
it doesn't matter. And it's your glass. It'll break. Whatever. It doesn't make any difference. But so the thing about real estate investing is I think that the returns can be really great, right? It's not unreasonable, I think, for someone to expect to get a 10 or 12% annualized return over a long period of time in real estate investing.
And I mean, let's throw another question out there right now. I mean, is the pandemic or any kind of economic downturn a reason to not get into real estate investing, in your opinion?
I mean, maybe. I've always said that you buy whenever you buy and you sell when it's high. Most people say buy low, sell high. I don't think that's true. Look, if you bought at the height of the last market cycle in 2006 and you sold in 2019, you did great. It didn't matter, right? You buy whenever you buy. If it cash flows, you can keep it for the long term. You have long-term financing on it. You should be fine. The pandemic caused me to pause on real estate purchases for a few months. I feel comfortable moving forward now, I think. Now that we're, almost 3 months into this, right? We're starting to see, a light at the end of the tunnel. I don't think that it's smart for someone who has no real estate right now to run out and buy real estate. I think you need to have a lot of knowledge. You need to know what you're doing. You need to be extra cautious right now. But it is possible to buy property that's going to cash flow, that you can finance with long-term financing. And I don't see anything on the horizon that says people aren't going to pay rent in the future. Look, I don't know that I would buy an office building today, right? I mean, I might, but I don't know about that. I'm much more interested in buying residential because people have to live somewhere.
Yeah.
I would consider, I would consider pausing for a minute. If you're just thinking about getting involved in real estate, I would say typically I tell people just to do it. Just go as fast as you can. Don't go crazy and, overspend or anything like that. But get the education you need, get the information you need, find
start
partners.
the learning process.
Yeah, start the learning process. And you can do that now. You should be learning right now. You should be analyzing deals, thinking about real estate, reading books, listening to podcasts, watching the Old-Fashioned Real Estate Show, which we know you're doing because otherwise you wouldn't hear me saying this. So good for you. You've done one of the critical steps to becoming a successful real estate investor.
Yeah.
And yes, I did just call that. I just said that a critical step to becoming a successful real estate investor is watching our show. So if you haven't watched our show,
you're screwed.
Yeah, you have no chance. You have no chance. Fortunately, if you haven't watched our show, you're not watching our show, so you don't know how unlucky you are.
That's right.
So, so what else? What else do you think about whether or not people should be getting involved in real estate? I might have to look at my notes here and see if we had anything else.
I agree almost wholeheartedly with all of your sentiments. I would expand maybe a little bit on, there's a lot of things you need to do in conjunction with just the learning part, right? Like real estate investing takes money, and there's a lot of different creative ways to obtain money, whether you partner with somebody else or you have money for a down payment and a bank's going to finance you on the difference, and a whole host of other ways to do it too.
Yeah, and actually we've done a couple of shows on that.
But that being said, if you're looking at like bank financing sort of thing, like, you probably need to take a look at your situation financially, credit card debt.
Listen, I'm not
cash on hand.
I'm not 100% on Dave Ramsey's team here, as you know, because I have debt, but and I'm happy about the debt that I have. But there is something wise about his. You shouldn't be investing in real estate if you've got a pile of short-term revolving credit lines that you can't barely pay the minimum payments on. Because even if you have the ability to get into real estate with no money down, maybe you negotiate an owner carry or something, you still need money. Like, you still got to pay the bills. Like, what if your tenant moves out? How do you pay the mortgage? right?
Well, what if they cost $5,000 worth of damage?
Yeah, they move out and cost $5,000.
Because you're going to have a hard time putting that on the credit card, apparently.
Yeah, because your credit lines are already full. So you need to have access to money. You don't necessarily need to put money in, right? You might be able to do a no money down deal where you get owner financing, and you might have $20,000, $30,000 worth of available credit on a credit card, and you might feel very comfortable getting in and not really having any cash. But that person obviously has good credit, and they've managed their money such that they don't have a bunch of unsecured debt.
Yeah.
So yeah, I mean, another thing you could be doing right now if you're in that situation is working on your credit, working on your payments, getting rid of as much of that debt as you can. Look, real estate can make great returns. We talked earlier about maybe 10, 12%. Sometimes you can even do better. Those kind of returns are amazing. If you make a 12% annual return over a 6-year period, you double your money.
Yeah. Power of 70,
Yeah,
so to speak.
power of 72, really.
Yeah.
So I mean, like, and the thing is, the difference between that and like putting the same amount of money in like a bank account that's going to pay way less than 1% is that it's going to take you like 50 years to double your money.
Basically.
Yeah, so you can put, if you have $10,000 and you put $10,000 in a bank account, 50 years from now you might have $20,000. Where if you put it in a real estate and you make a 6% annual return for 20, 30 years, you could have a retirement.
Well, I mean, and as we've touched on in previous episodes as well, I mean, inflation is what it is, right? So in real estate investing is a great hedge against that. And so if your income outpaces your expenses, right?
Yeah.
And those continue to grow at the same exact pace over time, you're going to increase your cash flow over time because you're going to be outpacing inflation that much more.
Right, yeah. If your expenses and income go up at the same rate, the amount of money that you produce in net operating income goes up, which of course for larger deals means the value is forced up.
Yes.
Right? But even for smaller deals, the value of, if you're using leverage, the same thing also applies, right? If you have a $100,000 property and inflation's 3%, you get that 3% increase in cost on whatever you're doing, but you also get 3% increase in value on the whole property, which is greater than the cost, presumably. Otherwise, you have real problems with that investment, and you shouldn't have made it in the first place. Look, there are tons of problems that can come up in real estate. You mitigate them by being active, by studying, learning, preparing, and making the right deals. And so, yeah, you should invest in real estate, but only if you're willing to put in the time and energy to get the project done.
Yeah, no, there's no free money here. I mean,
yeah, it's like anything, right? I mean, you don't get paid. I mean, if it was simple, everyone would do it, right? Yeah. If it was really easy, you didn't take any risk, and it had a guaranteed return, every single person in the world would invest in it, or at least every rational person in the world would invest in it.
And it'd be much more expensive.
But, we pointed this out, I think, in our very first show, or maybe the second show. There are more millionaires from real estate investing than any other field, and more millionaires hold their wealth in real estate than any other asset class. Now, part of that's because there's a lot of real estate out there, right? But the other part of it is it's historically safe. There's a reason that banks will lend at very low rates relative to other things on real estate versus, say, like if you go to your bank and say, hey, I have 100 shares of Ford stock, can I take out a loan? Good luck, right? You might find somebody that'll give you a high interest margin loan where they'll give you 50% loan to value because it's a blue chip stock or whatever. But you're not going to be able to borrow 80% of the money to go buy that stock.
No.
Right? And the reason for that is that even banks recognize real estate as a stable asset over the long term.
That's right.
So that's the answer. If you guys have any questions, we might do some more question and answer shows in the future. Otherwise, you can always reach out to us in the comments to wherever you're seeing the show.
That's right. And like us on Facebook and all that other good stuff.
Yeah, subscribe to the show. Yeah, and follow us on Twitter.
Instagram.
We don't actually tweet very often, so following on Twitter might not really be worth it. But do it anyway. Like, it's going to be fun for you. Hey, by the way, let's do our socially distanced cheers. Cheers.